Hey, are you a business owner, entrepreneur, or professional? If so, we want you to apply to be a featured guest on our show. My name is Adam Torres, and I host the Mission Matters series of podcasts. I've recorded over 3,000 episodes, and we are just getting started. How do you know if you'd be a good guest to be on the show? Well, only one way to find out, and that's to apply, but I'm going to let you in on a little secret. We want guests that have a story to tell, guests with a brand, a product, or a service that can benefit my audience of listeners. If this sounds like you, go to missionmatters.com and click on Be Our Guest to Apply. I'd love to talk to you and get to know more about your story. Again, head on over to missionmatters.com and click on Be Our Guest to Apply. All right, now let's get into the show. Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have Van Carlson on the line, and he's founder and CEO of SRA 831B Admin. Van, welcome to the show.
Yeah, thank you, Adam. Look forward to our conversation.
All right, Van. So excited to learn more about SRA 831B admin, and also to get into our topic today. So really helping companies manage and mitigate risk in their businesses. I mean, that's a big topic. A lot of business owners, entrepreneurs, and executives that watch this and listen to this show, and I know they're going to get a lot from this, as will I. But just to get us kicked off, maybe just start with telling us a little bit more about how you got on this path to founding SRA.
Yeah, so I really started in '08. After the Great Recession, I was in risk management, had a pretty successful property and casualty agency, and worked with a lot of business owners mitigating their risk through traditional means, meaning, we're insuring their buildings, their equipment, their inventory, worried about their general liability, product recall, all the stuff that you normally would hear. And then '08 came along, and it really became glaring to myself, and unfortunately to a lot of business owners, the financial risk business owners take. And that's when I figured there had to be a better way. And I was introduced to this concept prior to that. And the concept is basically it's a very little known tax code to the business owner community out there. And the way I best explain it is similar to the 401k. There's only two tax codes that allow you to defer income out of your business. One's a 401k, so if you contribute to a 401k plan for your employees and for yourself for retirement, that's an expense at the operating company level. The 831B is the same thing, but it's self-insuring risk. If I have a exposure, let's call it a slip and fall coverage, right, or general liability, or I worry about my property being insured for fire, theft, vandalism, wind, hail, and all that stuff. I buy an insurance policy and transfer that risk to the insurance company, and that is a deduction. Under the 162, I get to deduct my work comp, my general liability, my commercial auto premiums, anything that's tied to insurances. But if I self-insure risk, meaning I can't transfer that risk through normal channels, that's not a deduction. So in 1986, Congress got together. There was a lot of things going on back in the 80s that they called the liability crisis, where insurance carriers were finding themselves non-renewing people. Premiums went up 250% in a very short period of time. And Congress said, okay, we have to introduce this tax code. We introduced the 831B tax code into the statutes to basically recognize self-insuring risk and deferring the ability to write off that self-insured risk. Because if I have a risk, I can't just take $1 and set it off to the side and say, hey, if something happens, I'm going to use this $1. That's not a deduction. So that's why Congress introduced the 831B tax code. So, there's two tax codes that allow you to deduct and defer taxes. One's a 401k, which most people are familiar with. There's rules and regulations to it. And, of course, the 831B. And there's rules and regulations of that. So no different than hiring a 401k admin. You need to hire an 831B admin company, and that's what we do as a company at SRA.
And why do you think the 831B, why do you think that's not quite as widely known? I'm just curious. like on your
You
end?
know,
You do this day and day,
well,
and some of the things that I know, and we'll get into the weeds on this, on what you're doing day to day, but people are thinking like, what? They haven't heard of it. Like, why do you think that is?
well, you know, it's a very little known secret. It's been a Fortune 500 company tool for literally decades.
Mm-hmm.
And they're the ones that took it over. I mean, there's been abuses under this tax code, and the abuses have all come from estate tax planning. It has nothing to do with the risk management. So, you know, I looked at this back in '08. You know, we're looking at upper echelon of companies. I mean, there was at one point there was $250,000 just to form an 831B plan, which was ridiculous. Mm-hmm. You know, but with competition, you know, fees contract and everything else. You know, there was 8 states promoting you to own your insurance company, or, you know, the 831B plan, which is a box, has to be, it look like an insurance company. There was 8 states in '08. Now there's 34 states. And, you know, and they're doing it for fee income and premiums. And then, of course, there's a lot of offshore domiciles that are used as well. You know, that's when you hear offshore accounts, it's the UPSs, it's major companies, Amazon and Microsoft. They own all their stuff offshore in the Caymans and Bermuda and stuff like that. Those are big insurance companies that are being held offshore. So I don't want your listeners, this is not a complicated issue. It's risk management that mitigates the risk using deferred tax dollars. And so, you know, the reason for all this is, you know, if something was a good example was last year in COVID-19, right? If you were forced to shut down, most general liability, most policies, they call them business operating policies, BOPs, have a business interruption coverage on your policy. The problem is it only covers direct losses, which means if I have a fire or a flood or sudden accidental water damage on my property and I can't operate there anymore, it triggers business interruption. So it covers my rent, covers my employees' payroll, covers my loan payments even, because I have no income coming in because I have no ability to do my day-to-day work. That's business interruption that's related to a direct loss. The problem with last year was there was a lot of indirect losses, meaning the municipality just said shut down. Or, hey, my main supplier, he got hit with, you know, a bunch of employees had COVID and they had to shut the warehouse down or the distributor down for a month. I couldn't get product in. You know, if you don't have something to sell, you can't make any money, right? So there's a list of things that go into that, you know, and then there's just no coverage for that. I mean, it specifically says in most policies that are written today after the SARS pandemic that happened really in 2009, there was wording specifically put in saying that if it's deemed to be a pandemic, there is no business interruption coverage. There is no coverage, period. And so a lot of clients, a lot of business owners last year find themselves self-insuring a risk that, you know, most people would have never thought would have happened in our lifetime. I mean, it's the first for us, right? And so that's really where, you know, if you go back to the 80s, what was happening then was there was just a huge increase in premiums, and it was just really pricing people out of the marketplace. And then if you had one claim on a policy you might have had in force for 10 years, you were being non-renewed the next year. So it became an insurance crisis. And unfortunately, we're kind of leading up to that now based on some of the tell signs that's happening right now with the hardening of the markets. Premiums are going up. There's some estimations right now. They can expect by the end of the decade almost 2.5 times more than what you're currently paying in your commercial insurance. You know, now you can get into catastrophic events, weather events, the weather changing the patterns, and then you have the COVID-19, which unfortunately a lot of those risks haven't even shown themselves yet. I mean, we're looking at potential lawsuits coming down the road tied to COVID-19 issues for many, many years. So there's just a lot of risks that, you know, and it was so expensive at one point. And truthfully, too, you know, you got to the CPA community is still trying to figure out the 2017 Reform Act, right? So a lot of the CPA community, the people that are preparing the tax, you know, work for small business, the middle market business owners, which is our clients, they're not aware of the tax code, or they're aware of the abuses of the tax code. They're not aware of the positives, and that this will become a normal business practice. I think that's going to drive the bus now after COVID-19, that businesses are finding themselves self-insuring more and more of their own risk. They're taking on first dollar loss now more so than liability policies, more than ever. The transfer and the burden of that an insurance risk are falling more to the insurer than the insured. And that's really where, there has to be this, they're all about, insurance companies do very well. They're some of our strongest financial institutions in our country. And they know what they want, and they hate catastrophic losses. I mean, could you imagine if this stuff was covered last year, how many insurance companies would have gone in the red last year had I know the government stepped up and did the PPP and all those things. But could you imagine if there was coverage for this? How many billions, if not trillions? They estimated in the first month we were closed, there would have been $450 billion of insurance claims paid in the first month to business owners.
Hmm.
The expenses, I mean, it would have been, it gets to a point where you can only bear the cost of insurance so much, right?
For sure.
And so that's all of those things. And I think now that the business owners, and hey, let's, you never know how good your insurance is until you have to go use it. But, I think a lot of business owners found out last year that, they weren't insured for everything. And it continues today. I mean, you talk about, we talk about issues with COVID-19, but look at cyber today. Look at the amount of information you're gathering from your employees, not only your clients, that you're ultimately responsible for to protect and maintain. And then on top of all that, you got supply chain issues that are being stretched. Your brand protection, right? I mean, who's selling brand protection? It takes you years and years to build a reputable space on any social media platform, but it takes seconds to destroy. All of those things become unrelated, unable to transfer the risk, but you retain the risk as a business. And then if something was to happen, you would just try to rely on current cash flow to make good on it. Well, that's not good risk management. We call it the double negative. If I have something going on, let's say you have a cyber breach, and I have to publicly announce that, hey, 1,000 of my patients were compromised, and their medical records were compromised, their social security numbers. How many more patients are going to want to show up to my door the next day to have me be their doctor or their dentist or whatever might be going on? So I'm going to have less patients coming through my door, but my expenses are going up. Are you going to go down to the bank and ask for a bigger line of credit or a bigger operating loan? So to me, when you talk about these programs and business owners that are hearing about it for the first time, I think it's extremely important to understand it's a tool. And for the right client, it's a fantastic tool. But that's all it is. It's a tool. It's worth understanding and knowing it. Depending on where you're at in the cycle of your business, this might be the greatest opportunity to do it right now. But down the road, it might be a better one. Or, if you're selling your business, there's a lot of things that go into the strategies of it. And we work with CPAs and financial planners and risk managers all over the country on different strategies and how you deploy an 831B plan. But I really think, if you survived 08, you survived the COVID-19, you owe it to your business, you owe it to your employees, you owe it to yourself to investigate all the available tools to you to better mitigate the risk you take every day to get up and go run your business.
For sure. And is there, speaking of the businesses themselves, is there a particular niche that you work in more than another? Are there other are you industry agnostic? Give us a little bit more of a feel for that.
I would tell you that we're across the board of industries. I would tell you that one of the fun things about doing what we do, besides helping clients mitigate risk, is finding out how people make a living. And you got to love a country where you're like, oh, you do what? And it's been fun on that part of it. So from our standpoint, there's no industry that we don't work with under an 831B plan, nor unfortunately no industry that's exempt from self-insuring risk. And so there's a 4-part test you have to have you have to go through in order to qualify to elect under the 831B. Very similar to the requirements of a 401k, ERISA rules, discrimination, all that stuff. And there's 4, we call them 4-part tests at the 831B plan. And, as long as you can meet those go through that 4-part plan, we don't care what industry you're in. I can tell you we have them from one thing that we saw last year and we're seeing this year again pick up is a lot of content providers on the internet that are worried about being shut down overnight by YouTube because somebody's made a comment or maybe one of their partners did something they weren't supposed to do, and all of a sudden their revenues dries up literally overnight. And then we're getting to the distributors and wholesalers with supply chain risk. They never had issues with supply until this year. And it's so much so that, they're on the verge of potentially closing their doors, a lot of people, unfortunately, because they can't get a product or a critical piece to their product in order to finish out what they need to do in order to make their living. So, we're seeing it all from all over the different industries. Obviously, we're pretty strong in the medical community. When you look at the malpractice insurances today, there's gaping holes of coverages that are missing. And unfortunately, a lot of these doctors today have first dollar loss, which means, when I say first dollar loss, for your listeners, it's basically, when I have a collision comp on a vehicle and I have a $500 or $1,000 deductible, I pay that when I damage my own property, and I pay a deductible for that. Well, under liability, let's say I was involved in an auto accident, I hurt somebody, their neck got strained, and I rear-ended somebody. Okay, I pay a collision deductible for my car, but then my auto liability insurance covers their damages and any medical issues they may have. I don't pay any dollar on that side of it. What we're seeing today, though, is especially in the commercial insurance, especially in commercial auto insurance, is more and more clients are being held responsible for a deductible on their liability coverages. And that's what I mean by first dollar loss is going away. So you, even as the insured, still have to pay a portion of that loss under liability. And those can become very astronomical, cost-expensive things that, again, if they were to happen, you would just pull that money out of cash flow, which hopes you hit it at the right time. Hope you have enough cash flow in there because, cash flow, it's the blood of the business, right? It's what keeps the heart pumping of the business is the cash flow rolling, and it's just rolling dollars, right? And hopefully you're making a profit and you're able to take it off the side and go live, right? But the important part is keeping that cash flow going. That's why it was so important last year for a government to step in and pay a lot of the PPP things because there was no cash flow, right? The cash flow dried up. Businesses were shut down. And so this is what this is about. It's about maintaining the cash flow of the business, keeping the blood and the heart pumping. So, when things unexpectedly show up that you've took the risk for, now you can take last year's profits because you set a little bit aside the previous year that would have been taxed, and then now you got a much more bigger bucket of money to go weather that storm with. And that's really where the business owners really have to understand the powerful part of this code is deferring the taxes and building a rainy day fund, a war chest, whatever you want to call it, to be able to fight the fight better, to survive when unexpected happens. And I can tell you that, and you know this, Adam, there couldn't be any better example, unfortunately, than COVID-19.
Yeah, 100%. I mean, and I know, I'll just say, I know we just barely scratched the topic on this, and I know you can talk about risk management and provide case studies and otherwise, but we're about out of time for this particular episode. So, Van, I'll ask you one final question. If somebody is listening to this right now, and if they want more information on SRA 831B admin, what's the best way for them to connect and to follow up with you and your team?
Well, I'll be honest, the best way is to go to our website. Our website domain is 831b.com, and I would encourage your listeners to go there. We have educational videos. They can certainly request case studies. I think we have some case studies available to them online, and we have a lot more of that, actual case studies, like clients that were clients of ours now and had experiences of the unknown. And on top of all that, just doing their own background, their own education of themselves. This is something that's, nobody gets excited about insurance. Nobody gets excited about, unfortunately, until something happens unexpected. But, and a lot of people find insurance and business to be a nuisance, right? But I would just tell you, on this particular program, in this 831B, you owe it. I can't emphasize it enough to business owners. Understand it. I'm not saying do it or don't do it. It's like making a decision to do a 401k. You got to make the decision based on what's best for your business. but understand what it is. And then you make a decision. And we're finding ourselves to be more educators than anything, because to your point, we got to get the word out about this. The next time an unforeseen issue happens, like COVID-19 or who knows, right? We're going to live through catastrophic events and hopefully come out stronger on the back end. But having an 831B plan put in place to take on those unforeseen issues, it's just not only good risk management, it's just good business. So 831B.com is the best place to start with us, and you can reach out my team. And we have a couple hundred advisors all over the country that we'd love to set you up with. If somebody here in your back neighborhood that we work with already, we'd be happy to introduce you to them. So by all means, go to our website and learn more about the code and make some decisions.
Fantastic.
Get educated.
Well, great stuff there. So, Van, first off, really appreciate you coming on the show and sharing more about your background and what you're doing over at SRA. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. Hope you learned a lot. If you did, especially if you're a first-time listener, hit that subscribe button. We have many more mission-based entrepreneurs, executives, and experts coming on, and we don't want you to miss a thing. And, Van, thanks again for coming on the show. It's been a pleasure.
Thank you, Adam. Appreciate it.